And thinking about the 2021 strategy, Karen, you talk about secular growth themes in Asia in particular. So, and some of them look remarkably familiar. It's as if we're going back to some themes of the past that maybe still have plenty of room to run. The rise of the middle class in China, in India, for example. This is something we'll return to, is it, on the other side of COVID?
I think that's right. But what I'd add in, Anna, is it's not now just about how the economies are maturing. It's about how the capital markets themselves are maturing. And that's important because often there's a problem for investors, as you can see a developing nation and you can see the strong economic growth, but you've got no ability to invest in the companies that are benefiting from that growth. And that's sort of been the problem, 10 years ago, for example, where if you wanted to invest in China, you really had access to the state-owned enterprises, which weren't really the sort of new China, the new growth, the efficient new companies. And it's really, I think, how those markets are maturing with Bond Connect, with the A-share market, and just the new companies that are coming to market, which is why we think that sort of reinvigorated this rising middle class story. So for us, we think this is going to be Asia's decade. We think that in the last decade, clearly performance was very much dominated by the US for both fixed income, yield, stock performance and the currency. But as we look forward from these valuations, we think that it's going to be, a broader Asian decade. And as I say, that's across stocks, the opportunities in fixed income, as well as what the currencies can be doing.
When you look at sectors, Karen, what stands out the most to you right now? I mean, where do you think we haven't seen a really bubblicious move? What's still valuable?
Well, I think it's looking through the segments of the value basket and working out what you're comfortable is a truly cyclical headwind, which is going to be resolved over the course of the next 12 to 18 months. And what do you think are the secular headwinds? So I think within that, segments of value, there are certain parts of cyclical sectors like some of the leisure and hospitality industries that will come back over the next 18 months as that confidence builds. I think financials is particularly an opportunity. We do need to see, I think, yield curves globally to steepen, but also that prospect of deeper negative interest rates to diminish in Europe. That's really what's required for financials to perform. But at some point over the next 18 months to 2 years, we're going to get that. We just had a massive fiscal stimulus is going to be pushed through in the US. At some point, the Fed is going to have to taper its purchases. And at that point, I do think financials are going to be outperforming tech. And then that's going to lead to, a broader, not only a sectoral rotation, but that's going to lead to a star rotation, and that's going to lead to a regional rotation. So I think it really is just about understanding, what were the earnings winners last year and the earnings losers, how will that rotate? But then also factoring in how this low interest rate environment has only exacerbated that winners and losers story, and how that will also, lead to that rotation.